ठीक है, एक बार देख लेते हैं कि आवाज़ वगैरह सही है और फिर हम स्टार्ट करेंगे। क्लियरली ऑडिबल हूँ। ठीक है, देखो ये तो ट्रेंड चल रहा है मार्केट का, ठीक है। यहाँ पे मार्केट ऐसे मूव कर रहा है, दैट इज़ अ थिंग विच इज़ अंडरस्टैंडेबल, क्योंकि यहाँ पे प्राइस मूव कर रहा है उसके अकॉर्डिंग। और एम ए सी डी में दो लाइन होती है, एक फास्टर होती है एक स्लोअर होती है, वो भी हमें पता है। Hey bro, you wanna do trading well? Yes, I do. June, welcome to the live stream. If you are into stock market and finance, so yes, you can subscribe to the channel and you can like the live stream as well. I hope your day is going fine. Okay, so basically, yes, I was talking about the MACD line, right? So there are two types of MACD line, the faster one and the slower one. So MACD histogram is just telling us the difference between these two. And looking at this, it is giving the earlier warning. So like there is this zero line, this is the zero line above which you can say that the uptrend is going on, below which you can say okay the downtrend is going on, so something like that. So let's say the MACD lines are below it, but it is coming near the zero line, so that will be the early sign that the downtrend which is going on is about to end. Similarly, if the lines are above the zero line and it is slowly coming towards the zero line, then you can say that okay the uptrend is you know ending. And the only advantage it gives is it is giving the early warning signals. That's what the author is also trying to signify over here. So this is a price line and this is the MACD and this is the MACD histogram, which is the difference between the two lines. The MACD histogram plots the all right. Pragya Rathor, welcome to the live stream. The MACD histogram plots the difference between the two MACD lines. Signals are given on the zero line crossing. Signals are given on the zero line crossing. So when the zero line crossing will occur, then only you can say okay there is this buy signal or sell signal. So let's say the market was in a downtrend and the like MACD is also below the zero line. Now it is coming closer to the zero line and there is this crossing that is taking place. So when the crossing will take place, then you can understand okay the trend is about to change, and then you can initiate the position accordingly, right? It will reflect in a price a little bit later on, so that's the benefit of it, because once it will start reflecting in the price, everyone will behave accordingly. So yeah, the MACD histogram plots the difference between the two MACD lines. Signals are given on the zero line crossing. Notice that the histogram turns earlier than the crossover signals. Okay, in histogram it appears earlier than the crossover signals. Okay, giving the trader advanced warning. Alright, understood. And how it is getting reflected in here. There's this price fall, then the market went up, and after the crossover the market went up again. Combine weeklies and dailies. As with all technical indicators, signals on weekly charts are always more important than those on daily charts. We already understood it, right? The bigger the time frame is, the more important the signals are. So like weekly charts are always more important than the daily charts. Similarly, monthly chart will be more important than the daily chart, like weekly charts. So the best way to combine them is to use weekly signals to determine market direction and the daily signal to fine tune the entry and exit points. A daily signal is followed only when it agrees with the weekly signal. So it's like, let's say this is your weekly chart. In weekly chart you can see okay there is this clear uptrend going on. Alright, now you got to know okay in the weekly chart there is this clear signal of uptrend is going on. Right, now in the you will switch it to daily chart. In daily chart if you'll see okay the market is currently a little bit down, and then you realize okay now it has started moving, like it started going up. So you'll be like okay the trend is up, and in the daily chart also now it is initiating the up trend or like whatever it is, then you can enter. So it like weekly chart is going to give you the signal or like weekly chart will tell you the actual direction. So basically you have to check the trend in the higher time frame, and to enter in the right time you have to use the lower time frame, which in this case was daily time frame, right? Cool. So that's what the author is trying to say. As with all technical indicators, signals on weekly charts are always more important than those on daily charts. The best way to combine them is to use weekly signals to determine market direction and the daily signals to fine tune entry and exit position. A daily signal is followed only when it agrees with the weekly signal. So both of them should be in the same direction. So let's say there is this uptrend going on in the weekly chart. So the daily chart also, like when you look into the daily chart and the uptrend is also going on there, then only you can enter. So both should be in correspondence to each other, right? Used in that fashion, the weekly signals become trend filters for daily signals. Okay, so understood. That prevents using daily signals to trade against the prevailing trend. Alright, two crossover systems in which this principle is especially true are MACD and stochastics. Alright, what is going on in this chart? So this is weekly bar chart. Clearly in this range you can see there is this uptrend going on, and then little bit of correction, then again uptrend, right? So in the MACD it will be visible little bit earlier. So here the crossover takes place. So this is the zero line. Before this the lines were below zero line. Now here the crossover takes place, and from here the uptrend initiates. So if somebody has entered at this point, you can see there is this clear uptrend, right? And after this point you can see the lines are getting decrease, and at this point again the crossover takes place. So that means at this point the downtrend initiates. Alright, so similarly this is how the trend and everything is getting accompanied by the histogram. The MACD histogram works well on weekly charts. At the middle peak, the histogram turned down 10 weeks before the sell signal down arrow. At the two upturns, the histogram turned up 2 and 4 weeks before the buy signals up arrows. Cool. The principle of contrary opinion in futures oscillators analysis is the study of market extremes. Alright, contrary opinion, although it is generally listed under the category of technical analysis, is more aptly described as a form of psychological analysis. Contrary opinion adds the important third dimension to market analysis, the psychological, by determining the degree of bullishness or bearishness among participants in the various financial markets. The principle of contrary opinion holds that when the vast majority of people agree on something, they're generally wrong. Okay, so that's what the contrary opinion is. So if the vast majority is thinking something, then they are generally wrong. A true contrarian, therefore, will first try to determine what the majority are doing, and then will act in the opposite direction. So contrary opinion basically means the contrarian, contrarian, contrarian. Okay, the contrarian. That means someone who is following the contrary opinion. What exactly it will do? It will see where the majority is going, and then it will act in the opposite direction of it, because that's what the contrary opinion is all about. They think that when the vast majority of people agree on something, they are generally wrong. A true contrarian, therefore, will first try to determine what the majority are doing, and then will act in the opposite direction. Humphrey B. Neal considers the dean of contrary thinking, described his theories in a 1954 book entitled The Art of Contrary Thinking. 10 years later, in 1964, James H. Sibbitt began to apply Neal's principle to commodity futures trading by creating the market vein advisory service, which includes bullish consensus members. Market vein, PO Box 90490, Pasadena, CA. Okay. Each week, a poll of market letters is taken to determine the degree of bullishness or bearishness